Hello again. It's been about a month since I made any kind of video or any update or anything, so figured that I should do one now. But you can probably hear from my voice that I'm quite sick at the moment, so I'm going to make this short and sweet. But there's a couple of comments that I got over the last month. One of them was telling me about the NBMI monthly income fund being winded down. So I had a little look at that just to see what was going to happen. And also, I was asked to have a look at SuRo Capital stock from someone in the comments. So I'm just going to address those two things first before I give you a rundown of what I've been doing for the last month with the portfolio. So, first of all, I'll start with SuRo Capital. And by the looks of it, if you bought into this company anywhere in 2020, 2021, or 2022, you will be down at the moment. It looks like everybody is. So they were founded in 2010, and this graph goes back to 2011. So it's a pretty good gauge of the entire history of the stock that we know of, anyway. But by the looks of it, they are being hammered by the SPAC collapse. The SPACs are special acquisitions. It was, now I'd be lying if I said I understood it completely, but my understanding of it is that it's basically a way of having an IPO or an initial public offering as part of another company, something along those lines. But it's basically a way of getting companies public. So a lot of those have absolutely collapsed. Inflation is way up, cost of living is way up, interest rates are up. So things are going to suffer. And in my own experience, if you go looking for doom and gloom stuff on YouTube or anywhere else, you will always find it. There's channels that are entirely devoted to just negatives because that's their audience. That's what their audience want to consume. So if you are struggling with looking at stocks falling this much, or if you are really scared about what's going to happen, I suggest you don't watch those things for a little while. Maybe take a break, because this could get a lot worse before it gets better. So I'm having a look at my position now. The dotted line is where I got in. It's the average price. So I could have bought some up here and then some down here, and then the average is around here. But I am currently 32% down, and I only have €10 invested. So this is it's a good example of why I'm using the strategy that I am using. I don't go all in on any stock, and I'm trying to get all of them to pay €1 per dividend payment. And that would be around €100 or more invested into every company that I have. And the reason I'm doing that is that if a company goes bust or gets acquired or anything like that, and every penny that I put in, the whole €100 disappears, it would be less than 1% of my portfolio. So I won't really care. Now, the downside of that is that if you go, like, you could go all in on a company and it has a fantastic day, and then all of your money increases by 40 or 50 or 100%, or if you're in cryptocurrency, it can be many hundreds of percent. But the risk that you take is that if you bet big, you can lose big. Now, with SuRo Capital, I've done a little bit of reading, and I've seen that the SPAC collapse has hit them hard. When I did the last video on this company, their profit margin was like 12,000%, and their debt to assets ratio was very low. But what we can see here is 200% dividend yield. That's not going to happen. They are not going to pay you double what you put in. It's just not going to happen. And they're losing $4.40 per share. So, oh yeah, look at this. Profit margin negative 3,800%. That's very bad. Over the last quarter, the profit margin is negative 850%. Very bad. However, I have seen a couple of things, a couple of articles and a couple of videos, and it looks like they're just being hammered. I haven't seen any reason to think that they're going to go bust, but I don't know. So if you are heavily invested in them, you should probably evaluate what would happen if the stock went to zero. Can you afford to lose what's remaining? That's why people sell even when they're in the red. I don't do it personally because I never have that much invested into any one company. I'll ride them out until they die. But if I had put 10 grand into this company and it was down 30%, I might be evaluating whether or not I should sell, take the 7 grand that's left and use it elsewhere. How long will it take you to get the money back if your position in this company goes to zero? Now, their debt is actually pretty good, 26%, but these are figures, as far as I know, these figures will be released by the company themselves, and people are always capable of lying. So you have to take everything that you get with a pinch of salt, even a pint of salt. But I also saw a statement that SuRo Capital released after Silicon Valley Bank failed. They said that they didn't have their money with Silicon Valley Bank, which is very good news. However, the fallout effect of what's going on at the moment all around the world can kill any company. A good example of this would be Credit Suisse. But just for a little bit of fun times, I will list all my positions in order of how bad they're doing. It might make some of you feel better. Yeah, this is dead. Loyalty Ventures. I think I got this company as part of a demerger from something. And Silicon Valley Bank, which has collapsed, that was holding the money of, I think, half of all the venture capital funds or venture capital businesses in the USA. So, as you can imagine, there's going to be casualties. But luckily, I only had €23 in it, which is gone, unless somehow it recovers from certain death. 99.96% down. I think that's the worst position I've ever seen in my portfolio. AMC is a meme stock. Adler Group, probably not long after, is going to die. These have been sanctioned. These have been sanctioned. And next we have Credit Suisse. I got into Credit Suisse pretty recently because I figured that if it's like one of the oldest banks in the world or one of the largest banks in the world, that I should probably give it a chance. That would qualify it to be part of my little collection. And then they basically failed like 2 or 3 weeks later. So there you go. But as I said before, my strategy means I don't have to worry about these things. Been absolutely hammered. 91% debt to assets ratio. Painful. So the next thing I wanted to address was the NBMI monthly income fund being winded down. Yeah, it's this. So basically, I received a massive dividend. I'll try and find it in the history, but I received a huge dividend from this company. It was like €8.60, which obviously isn't mad money relative to some of the fortunes out there. But it was a huge amount compared to my position. Now, I think it was a couple of days ago, so it could take me a while to find it, but basically received like 20% of the money I put in. I received back as a dividend, but it was a return of capital, which is a tax-free return of some of the money you put in. So you don't have to declare it for taxes. But usually when that happens, or in my own personal experience, when this has happened to me before, the company died. There it is. The company died not long after. It was Atrium European Real Estate, I think it was called. I had like €20 in them and I received a dividend for like €2.50, which is huge. Like 20% dividend yield is unsustainable. But that was them just giving money back to the investors before they disappeared. But this is it here. Return of capital, €8.64. And I'll show you how much I have invested in them. But they're basically winding down, so the fund will be closing. So I have about €50 invested and I've just received €8 in dividends. So it's 17% I got back in one single payment, a huge amount. But in the interest of experience, there's the big payout, dividend payout there. In the interest of learning from this, and because I only have €50 invested, I'm going to leave this where it is. I'm not going to invest anymore. And I'm going to see what happens in this winding down. So this would be the second time it's happened in my portfolio, and at least I can then give a bit of advice to anybody who it happens to in the future. Now, apart from that, I'll do a little rundown of what I've been doing and how the portfolio has been going. So, general gist, like personally, I'm still working the two jobs, so I'm very tired, but earning decent money. Wage isn't fantastic because it's not qualified work. I'm kept busy every day, certainly. I'm in work 7 days a week. I look forward to holidays much more than I used to, but it means that I have not had as much time for the channel, but I've had a lot more to invest into the portfolio. So you win some, you lose some. But these are the dividends that came in today, which is the 3rd of April. So what I'm going to start doing, what I have been doing in the last month, is I've been investing anything I have into stocks that pay every month. Now, this is risky. This is very risky. A lot of people don't like stocks to pay every month because they have to maintain this high dividend, and sometimes it's detrimental for them to do that. But these are all, I think pretty much all of them pay every month. This one's brand new, so I haven't received a dividend from them. This is not a monthly payer. Neither is this. And usually, if I come across a stock that I have quite a small position in, but it's also quite red, I'll throw the money in there instead. But there's been an automatic deposit of €5 per day into this account, and then any money that I have spare, I try to keep my expenses as low as I possibly can, and then any money that I have spare gets invested. So the majority of them have been, those are quite big ones. The majority of them have been stocks to pay every month, but also bonds. This is only in the last couple of weeks, but we should see the bonds quite soon. Here we go. So I'm trying to get every position that I have that pays every month up to €1 per dividend payment as fast as possible. Now, the benefit of this is because I plan on getting them to €1 per dividend payment and then not selling them, it will mean I'll receive €100 per month while they're all paying normal dividends. If they pay higher, then obviously that goes up. If they stop paying a dividend, I should be okay because I have 100 different positions that pay every month. But this is very risky because, as I said, they have to maintain this high dividend, and sometimes it's a terrible idea for them to do that. So they just won't, or they will, and it will destroy them. And I'm going to continue doing that until all of the positions that I have in this pie, these are the stocks that pay every month. Now, some of them will need a couple of €100 in them to pay €1 per dividend payment. Like I received a dividend from LTC Properties today, and it was 95 cents. So I put another, I think, €10 into them. Should be up to €1 now. But as you can see, a lot of these are quite heavily red, like 51% down. So it is risky, but it's just part of my strategy at the moment to get them all to pay €1 per dividend payment as fast as possible. I would not recommend you do this if you are starting out dividend investing, or even in general, because I don't know if this is a good idea, and to be honest, I don't think it is. So all of those stocks pay every month, and then I have the bonds. These also seem to pay every month. I see the same names pop up very regularly, so I have to get all of these up there as well. But I think there's quite a lot of them that pay a very low percent, so it will need to be a couple of €100 in each one to get them there. But then I can use the income from those to then start bulking up everything else. So I think I received 40 something dividend payments today. And what I'm going to start doing is, after I filled all those pies of bonds and stocks to pay every month, I'm then going to start going down through the list and looking for positions that I have that are paying close to €1. So I'll see if I can find one. There's LTC, but I just put another, I think, €10 in. So that should start paying €1 from now on. Unless, of course, they decrease the dividend, which happens all the time. So I'll start going through all these positions or all these payments and then adding to those companies just to get them up to the €1 mark. But as you can see by these, a lot of the dividend payments are very, very small. And it is quite frustrating in the beginning because it's a very slow grind to get a dividend portfolio off the ground unless you already have quite a significant amount of wealth to start with. A lot of people use 100,000 as a milestone because that's when you really start seeing a good return from your investments and you don't really have to invest as much because you already have a substantial amount of wealth. But when you start from essentially zero and work your way up, there will be a long time where the dividend payments will be very small and you'll be wondering if it's worth all the money that you're throwing in, especially when they're going red like this. It looks awful. But it is very important to realize that if you got started in the stock market within the last 2 years, you pretty much picked the worst time apart from before the dot-com bubble or before the 2008 crash. Everybody was going wild while everything was locked down. We were being handed money by the government and we couldn't go out and spend it. So a huge amount of people started investing for the first time. And a lot of those people are probably infuriated, would be the word that I'd use, but probably very upset about what's been happening. But as I've said many times before, if you can handle seeing this happen, you've either invested too much money or you shouldn't be in the stock market, to be honest. If you can handle seeing a position drop 50% when you were expecting it to go up, then you won't be able to handle it the thousands of times that it's going to happen in the future. Now, I'll give you a look at my best positions and we'll see what's going on, see who's been thriving in the chaos. So, energy companies, of course. I think there has been a cut in oil production, so it's probably going to get even more expensive. And thankfully, I don't drive, so I don't really suffer too much from it. But I do suffer from the cost of living going up, from inflation going up. And because I live in Ireland, I now have to suffer with the housing crisis that we have at the moment. There is too many people and there's not enough places to live, is the general gist of it. So fun times ahead for us all. But a couple of these are doing quite well. It's a shame that they're such small positions, and it's even more of a shame that I'm not going to be selling them. Oh wow. What? Okay. I have not looked at this in a long time. Oh, that's fantastic news. Still no word of a dividend, but I bought into Rolls Royce ages ago. It should actually say here. Yeah, I started it on the 21st of June of 2021. And see if we can find that here. Yeah, but I got in about here, so I obviously waited until after the devastation and then I bought in. That's very nice. So if I had thrown a lot of money in and took the risk, I would be way up now. But that doesn't really apply to me and my strategy. But it's fantastic to see that nice recovery. We'll see what the future brings. But apart from that, it's just been working away, investing mainly into positions that pay every month, which I'm going to continue to do so until a lot of them, or even all of them, are paying €1 per dividend payment. And then I'm going to use that money and any money I have to invest. I'm going to stick to the safe ones. So I'll show you what I mean by the safe ones. This list is the top dividend payers in Europe. Now I made this, I think it was last year or maybe even in 2021, but it needs to be updated. I got this list online. So a lot of these are, I wouldn't say great dividend payers, but decent. But the thing is with European stocks, they generally pay once or maybe twice per year. So it's not fantastic. These ones are some of the most notable dividend payers of the United Kingdom. So I'm going to focus on them as well. And then finally, these ones, the dividend titans. all of these have not missed a dividend payment for the last 100 years. So if you're interested in dividend investing into all of these are American companies, as far as I know. So if you want exposure to the USA dividend stocks and you want reliable dividends, these would be the ones to go for. So that's really it. Now to summarize, SuRo Capital is not doing very well, but I can't see any indication that they're in the middle of a death rattle. But if you are heavily invested in them, I would take into consideration how long it will take you to get the amount of money back if it goes to zero. If you put in 10 grand and it's down 30%, you might be better off pulling out the other 7. But if you're willing to leave it and ride out the storm, it could go to zero or it could double. You never really know. But you should decide based on how difficult it will be to get that amount of money back again, because your net worth as a person has dropped by that much. And if you leave it and ride it out to zero, it could take years to get that money back. Well, that's pretty much it. To be honest, nothing else really exciting apart from banks failing. A couple of corpses, walking corpses that I have will be added into the casualty pile before too long. And I'm just going to bulk up the monthly pairs. But apart from that, I hope that you found a little bit of use. And sorry about my low energy and my voice, but I figured it's been long enough since I've updated anyone. And I was also asked in the comments to talk about SuRo, but I'm going to get some rest. And I hope that the market is not too cruel.